Hi and welcome to the Market Alert for Wednesday 7th of April 2021. So yesterday bonds and bullion were bid higher. Dollar skids as Biden bonanza hopes fade. So I don't know what's happened to the infrastructure deal. Looks like it's come off the rails at the moment as the yields slide as doubts grow over Biden infrastructure plan there. Inflation concerns easing amid doubts over the viability of more generous spending. So they had second thoughts on this. But yesterday the yields moving sharply low, which we'll see in just a moment. And here is the five-day chart of those yields. A bit choppy, but you can see there over the last 3 days from Monday, certainly a move to the downside. So pressure off at the moment for the yields. News today, we've got crude oil inventories at the usual time, 3:30, and then 7 p.m. we've got FOMC meeting minutes. This is not a press conference one, no. This is April. The next one is June. And the implied volatility creeping up a bit after yesterday's weakness from 13.95 to 14.27. So starting to move to the upside a bit. And the reason for this is quite simple. If we have a look at the Dow, is this the Dow? It is. You can see there we've got a bit of weakness for yesterday. The market's starting to get into a bit of a sideways move again though. Hopefully we'll start to see prices break to the downside. We do have, and I'm stating the obvious here, obviously May follows April, and the old adage of sell in May and go away. If you go back and look at a monthly chart on this, you'll see that this tends to pan out quite nicely. I can't remember the percentages. I had a look at it a few years ago just to see how predictable the pattern was. But nonetheless, given that the markets moved so far during the last year, it's certainly due for a correction, and the implied volatility is sort of pointing in this direction as well. So that's the Dow. You can see that we've got still got this low here and the all-time high. So a quick draw up of the fib retracements for the Dow gives us these areas here where the market could come back to. However, at the moment, the market's momentum is still to the upside. Price is remaining above the 5-bar moving average and certainly the 20-bar there as well. But it can soon change. That's for sure. It doesn't take a lot for the sentiment to switch around there. Let's have a look at the German DAX, and yesterday more weakness in the DAX than the Dow yesterday, and we are closing and trading below the 5-bar moving average at the moment, and these are the areas of support should the market move lower. It's certainly looking weaker overnight. And the 2-minute chart, if we just move this over to the left, find out where we kicked off and just compress this down for a bigger picture just to have a look, see what the market's done. We can see that the 200 MA certainly in the early hours was supporting the market. This can be seen here until we got to around 2 a.m, 2:30, you can see prices breaking through, but like a magnet, it was brought back every time that it's gone through. You can see it being pulled back to the 200 MA there until we got to an hour ago where the market has shown an increase in volume and prices moving lower. Again, an attempt to move back to this level, but at the moment struggling. So it's the 15,200 level there. We've got the DP above, so at the moment again it'll be a bit like yesterday, head to the low first, then possibly reverse and move back to the upside as we saw during yesterday's trading session. So there's the 5-minute, which is choppy, but you can see the evening there, prices moving lower, and at the moment just in that sideways move there. There's obviously support at this level as well, as we've seen the market bounce off this twice, but just stuck in a bit of a range there really, isn't it? So again, don't be surprised if we're sent down to the low and then find support, and I'll show you that in just a second. So just coming back to the daily chart, this is what we're looking at the moment. We've got the market currently trading below the 5-bar moving average, closing there yesterday. So some weakness around in the DAX at the moment. That doesn't mean to say they can't switch it and move it to the upside, but I wouldn't be at all surprised if we're not getting close to a correction, because seasonally in May we have this as well. I know we're in the first week of April, but nonetheless, nothing to stop it from turning up early, as they say. So let's have a look at yesterday's session, and we can see that the market came off those lows as the market traded down to this, and then in the futures market prices were just spiked to the upside. And then I'm just going to speed through now. As you can see, heading up to the DP already in the pre-market session, up 70 points, and then the market opened up and sold off, which you can see there from the DP. You've got the selling coming into the market, and then prices breaking the BRN through the 20-bar moving average, which we saw here as well, and then the market continuing to the downside there, all the way down to the low, which we know down at the low that prices like to find some sort of support, and we start to see this here. And what's interesting here as well is that at this area here you can see the profit taking coming in. We've got the shorts taking profits there, and what we get is another shakeout to the downside. So hang on, well, let's just make sure, let's just take it to Monday's low. They then reverse the market, and you can see I've drawn the fibs up there as I can see what's going on here, and they bring the market back to the upside, and they bring it back all the way as well, which was fascinating to see. The volatility yesterday was absolutely lovely as it moved up and down in this range. So then we get to the DP, and the market stops. No surprise there. I've got the fibs in now. I'm going to look to see what the 10-year yields are doing periodically, and then the market puts in a sell signal here, and the prices continue to the downside as they start to in this bar, prices start to come off the lows here, and we've got a 62% retracement as well at this BRN. So I thought, well, I'll take the money off this one, and which was initially a good move, but then as prices started to move to the upside, they struggled, started to trade sideways, and then they managed to continue to move to the downside. And you can see there, I'm just drawing in the support to the left where the buying came in here. I know it came in because it closed off the low, and then prices go through the BRN and then back down to the low. You see some buying pressure coming in here. There's 90% volume in this bar compared to the selling bar, and also sitting at the low 78% and 89 on the fib retracement. And then prices just trade sideways, come back, have another look, and again, fascinating bar here. This one you can see the volume is more or less the same as the previous bar. Again, shake out to the downside, and then bring the market back. And that's why again I've marked the fibs up there, and straight away you see the market moving back to the upside, and then just trail this back up. Hopefully the market will trade back up towards the DP or the 78 and 89. And what I'm doing here is looking at the 1 minute chart periodically as well, and I can see we've got some selling at the 78% retracement in the 1 minute as well. If you can't see it in the 2 minute, you'll find it in the 1 minute there, and there's confirmed in the 2 minute, profits taken, and then the market once again starts to drift back down, and we get to the 10 a.m. cut-off period there. And then in the afternoon, well, it was really boring. The market had drifted back down mid-morning as the Dow futures opened. Prices then drifting back to the low again. You can see a huge amount of volume here as they try and support prices, stop them closing below Monday's low. Prices then just become sideways. Now this is an interesting one here because I've drawn in the fibs from here to here, which you can see there's a 78 and an 89, and as soon as I looked at this, we've got the low there as support as well. Now watch the volume at this stage. So I'm looking at it, and every trader around the globe's looking at it, but watch the volume. If you don't use volume in your trading, then you're missing a real trick. It is the most important indicator of what's going on in the markets. And here you can see if you don't have the volume on, and you've just got price action, you have no idea what's going on at this point. Whereas here we've got the low, we've got a huge amount of volume coming into the market, and it was a case of, I think I'll step aside from this one because it's going to take a lot more volume to actually drive prices through this. So I thought I'll exit while it's cheap to exit, and it was the right move as prices. And again, you can see second buying bar coming in there, and prices trading back to the upside, and then getting stuck at the BRN and just trading sideways until we got to the 4 p.m. Cut-off period, which you'll see in just a moment. So yeah, really quiet afternoon after a lovely morning of price swinging up and down, which was very nice to trade. But there you go. So that was the DAX for yesterday. Now a quick look at the metals and the dollar, if I can find it. Let's start off with the US dollar. Yesterday pounded to the downside because of Biden and this sort of whatever it is, the vacillation that's now going on with the infrastructure, $2 trillion infrastructure deal, which seems to have gone cold. So the dollar trading down from the high to 50% and the 20 bar moving average. So this is going to put some downside pressure on the metals if we get a rally in the dollar today. So if we have a look at gold first, you'll see this also trading to 89% from this low this high projected to this low, and then retraced over here. And you can see this already. So there's some selling around in the market at the moment. If we look at the 5-minute chart, you will see this yesterday. You can see that we topped out at 1750, and that was the high, and that's where the market's been moving down from since. So a bit of volume coming in there at the moment in the gold market, but whether it holds, who knows. And the same for silver. We have a 50% retracement from this high to this low. You can see this projected back near the 20 bar moving average. So now I'm expecting to see some sort of retracement here. So what I'm going to do is draw from this low to yesterday's high and get some fibs in here just to see where the market is likely to find support. Now, interestingly enough, if I can just make this a bit wider, do this, and this is better. So here are the fibs for the downside targets, plus we've got the previous support over to the left, and then this one that I've been talking about, and there's another one below, just in case we have that big shakeout in the metals. But what we've also got in the way here is the 200 MA. We've managed to get back above the 200 moving average for the last 3 days. We can see there the market holding on Monday and then Tuesday to the upside, but we haven't got much buying volume here either. So it's crucial that the market holds above the 200 MA and the 5 bar moving average. Otherwise, we're going to work our way back through these fibs down to this low, as the dollar could move back to the upside there, wherever it is. It's here somewhere. There it is. So I should be keeping an eye on the dollar. I'm hoping that it's going to head down to the 62% retracement and back down to this level, so that it keeps the price of silver moving to the upside. But we'll just have to wait and see. But at the moment, it's moving to the upside there. Okay, I think I've gone on long enough and covered most things. And like I say, we'll see what happens with regards to the potential correction coming in this market at the moment, because there's certainly some weakness around in the DAX at the moment. And in the 2 minute, we can see prices coming off this as we head into the futures market session as we approach 10 minutes to 7. Okay, that's it for this one. As ever, thanks for watching. See you in the next.